So today I want to think a little bit about investors either being rational or irrational. I think we would all like to think that in general, investors are rational in their investment making decisions. So what I'd like to do is do the world's fastest case study involving Zoom, Verizon, AT&T, a company that had the ticker symbol Zoom, and another company that's private called BlueJeans. Thanks to Hedgeye for this cartoon. They do them daily and they are quite good. Why am I thinking about this? I'm thinking about this because Verizon has announced that they're going to buy BlueJeans. Now, BlueJeans is a competitor to Zoom that also does video conferencing. They've announced they're going to be paying less than $500 million for BlueJeans, which probably gives us a sense of what Zoom might be worth. But I wanted to do a little bit deeper dive in there to see what we come up with for ourselves. So what I want to do is I want to look at Verizon and AT&T. Verizon is buying BlueJeans, so that gives us maybe some sense of what it's worth. AT&T in same business as Verizon, and compare that to Zoom. Let's look at the financials and see what Zoom might be worth based on these limited financial data. Here we have the revenues for the three companies. The key point here is that the revenues for Zoom are dramatically less than they are for Verizon and AT&T. We can also look at earnings, perhaps a more meaningful measure because it incorporates the cost of doing business. Again, we can see that the revenues for Zoom are much, much lower than they are for Verizon and AT&T. Hopefully, when we look at the market capitalization, we'll see that it reflects these earnings and revenues type numbers. Now, unfortunately, when we do look at market capitalization, we can see that they don't, despite the fact that revenues and earnings for Zoom are much, much lower than they are for Verizon and AT&T. The market capitalization of Zoom is not that much lower than it is for either of these two companies. So what I want to do is do a really overly simplistic analysis to give us a sense of the relative value we might get out of these companies. So you're welcome to stop this and look at this spreadsheet on your own. But what I'm trying to do here is, again, get kind of a relative sense of what these companies are worth. I'm going to start with the standpoint that, hey, let's assume that kind of Verizon is fairly valued, and let's look at what the other two companies might be worth based on, again, the simplistic and minimal data here. So we're looking at revenues and earnings, given the revenues of the three companies, what might they be worth? And here we can see that if we do this analysis based on revenues, that Zoom is worth about 1.2 billion. If we do this analysis based on earnings, it's worth about 325 million. Now, the key points here are, again, very, very simplistic, but the key points I would see here are that it looks like, relatively speaking, AT&T is overvalued compared to Verizon. It doesn't tell me if they're both overvalued, both undervalued, if they're one's over, one's under, but it looks on a relative basis, it looks like AT&T is a little bit overvalued compared to Verizon. But the key point here is it looks like Zoom is massively, massively, massively overvalued compared to the other two companies, given its earnings and revenues. Now, of course, you're going to say, Brian, look, Zoom has the ability to grow faster than either of these two companies. I'm going to argue that it really doesn't have a competitive advantage, that the switching cost between Zoom, BlueJeans, Skype is minimal. So they don't really have a moat or competitive advantage there. And you're ultimately never going to reap the value that's shown here with the current market capitalization of 135 billion. Also, that BlueJeans was valued at about 500 million, makes these numbers as 1.2 billion and 325 million seem reasonable, actually. Now, of course, there is this other company called Zoom Technologies. I'm throwing this out there because it is completely unrelated to Zoom. And this price spike we saw here early in the year was only because investors were confusing it with Zoom Communications. There's no relation. And in fact, intraday, we saw the price spike up to 60. This disconnect or this confusion was so bad that we had to suspend trading on this company. Now, of course, the question is, like, what does Brian know? I don't know anything. Maybe the market's right about Zoom. What I'm going to say is it's currently trading at 100 times revenue, which is insane. It's ludicrous. I don't know how to say that anymore. I think even at 10 times earnings, there's an argument, 10 times revenues, there's an argument that That is crazy. You can see more details about those thoughts if you follow this video here. Thanks so much for listening and happy trading.